The Business Journal Roundtable series is sponsored by iSynergy, creative digital advertising.
Make some general comment as to what you're seeing in the market. We'll delve deeper into that, but maybe 30 seconds, 40 seconds. So we'll be delving deeper into it. But if you would start, I've introduced all of us, and we will begin with Rob.
Good morning, Rob Kelly with Consumers National Bank. We're a local lender, a community bank. The market it's quite, everybody knows I'm sitting around here, it's a little volatile right now. Business is down, but still there's business there. A diverse amount of clients. There's no area that demographically that is, people that are wealthy, for example, it's about the same percentages as it was a couple years ago.
Very good.
I'm Marlin Palich, and I'm the general manager and principal broker for Berkshire Hathaway HomeServices Stouffer Realty. I'm also a commissioner on the Ohio Real Estate Commission too. So this is my 45th year almost, so I've seen a lot of changes, but this is one that's really a different one for me to see, especially the lack of inventory. So I think that's one of the major concerns currently is that lack of inventory.
And we'll amplify a lot of this as we go forward. Holly.
I'm Holly Ritchie with Keller Williams. Same thing, whether it's a $100,000 home or a $450,000 home, we're still seeing multiple offers, 3 days on the market, over asking prices. They are appraising, which is still shocking, some of the numbers that I'm seeing, but in every area, in every price range, multiple offers.
Good morning, Janeen Shackelford, Brokers Realty Group. I've been in the business going on 9 years now. I'm seeing more renters looking for properties because they're tired of the rates going higher, in addition to a lack of inventory all over, whether it's cheap for investors or flippers, in addition to the luxury homes as well.
I'm Jenna Koontz with Howard.
Much louder.
I'm Jenna Koontz with Howard Hanna. I'm involved at the local, state, and national board of Realtors. And I've kind of noticed kind of the same thing, not really one specific area that's moving faster than others if it's priced right. We're still seeing sellers that want to kind of jump the gun on homes that might not be worthy of overpricing, and they're sitting a little bit longer, but we're still seeing things go on multiple offers, and we're seeing price increases on homes once they go under contract. So it's kind of an exciting time still.
Hello, my name is Samantha Aldish. I work for Keller Williams. I am also the president-elect of the local board for next year. Basically everything that's been reiterated, that we're still seeing multiples on all levels, no matter what the price point is. I still do feel also that there's a lot of cash floating around, a lot of cash buyers, and the same thing that with the rents going up as high as they are, more and more people are trying to get in to start buying. Even some people, I think even the older people who may have downsized and kind of went a rental way, I have a lot of older clientele right now that are just paying cash and just buying a house because the rent is just through the roof.
I'm Donnie Fatobene with Farmers National Bank of Canfield. I've been doing this for 35 years, and the market is different than I've ever seen it. Just like you guys have talked about, lack of inventory. Cost of new construction is pricing a lot of people out of that market as well, okay? And with the cost of new construction, that's where we're seeing some of the problems on the appraisal side, that those homes aren't appraising. So yeah, there are quite a few borrowers out there. We see quite a few pre-approvals coming in. It's just a matter of them finding something to buy.
Michael Stevens, actually owner of the local Coldwell Banker offices, also the current president of Youngstown, Columbiana Board of Associations, and sit on the board at the state level. I've been approaching 30 years, just shy of that, and I'd say probably, post-pandemic is probably, I've seen in real estate that I haven't seen in my entire career. Q1 was, very challenging, but I think still since the pandemic, we're still dealing with a good old supply and demand issue. So that's the case, pretty much to sum it up.
So, and we'll open this up to everybody. What happened? What caused all of this? Is this all pandemic related? What brought about all this turmoil?
Where do we start?
I think there's a lack of, I'm sorry, I think there was a lack of new construction since the last downturn. And so we have a lack of inventory in our area, whether it's smaller homes under 1,000 square feet, even up to the larger homes. So over the last 10, 15 years, that lack of new inventory, moving people, shifting people around, then when interest rates bottomed out during the pandemic, everyone was like, oh, this is a great time to buy because money's so cheap. So it still created a ton of buyers, but the lack of inventory was never there to begin with.
I would have to agree with that. I think prior to that, 2008, 2009, if you look back in the valley especially, there was a lot of new construction. And then when the crash came, it almost came to a halt. So therefore people, and I was talking to Rob about this, I think if you're, let's say, a baby boomer or something, you want to sell that house and you want to go to a villa or a condo, there really isn't much available. So you just come to the point where you say, well, I'm just going to stay where I'm at until something's available for it. And, I think that's one of the big things, and I think that's all through the United States, the lack of new construction. And again, it's pricing, for them to build a new one. Like you said, Donnie, it was like, okay, it's costing so much, the materials and stuff like that. And part of that could be from COVID because of the, supply chain issues and things like that, so.
And labor too in our area.
There's a lot of skilled labor. It's just getting somebody to get that construction started. And hopefully the lender's working with them. We used to have spec homes. We used to have, our developers who would develop, but we really don't have that anymore. And it's hard to get the financing, and I don't blame you guys either. I mean, you got stuck with a lot of inventory.
We do have some construction going on, but it is limited, and the price is, it is a little higher than what it was prior to the pandemic. And 18 and 19, the economy was very, very robust. The unemployment was at all-time lows, and people were buying, and that spurred on extra buying and excess buying. And now people don't want to sell the houses when they have 2.5% interest and downsize or upsize into a bigger house because rates are in the sixes now. So they're going from 2.5%, 3% to 6.5%. And so I think like a lot of the baby boomers have decided we're going to stay here until we see what happens with this economy and it settles down.
In addition, the prices have raised around the country. We're drawing a lot of out-of-towners to our area. I get California, the East Coast, Europe all the time. Investors looking to purchase here, to have rental properties, long-term investments. People are just picking on the map. I want to come to this area because I can afford to live on retirement. So you're seeing a lot of that because of our cost of living around here is way more reasonable compared to a lot of major cities in the U.S.
Let's expand on that because we are concerned about repopulation of our area. And when we talk about repopulation, we're talking about young people or college graduates moving into the area. Are you seeing any of that, or is it mostly retirees?
I'm mainly seeing retirees or just investors, not young people at all.
I'm not seeing too many young people. I'm seeing a lot of maybe like middle-aged family that wants to be closer to their parents to raise their kids, and they're able to work remote now. So they have that freedom, but not too many like postgraduate grads settling.
Samantha, what are you seeing?
I would agree with her. I see more postgraduates almost going out. I have younger kids and their friends are moving out of state for better jobs. But then, like she said, more people that have families either staying here with the help. And then I probably have, a handful of buyers who all work from home and they're probably middle-aged. That was more so last year. I've had a couple, but here lately, the last 6 months, mine have all been older people, and I've had quite a few people coming back from Florida.
Yeah.
Yeah, I mean, we have an older population around here, obviously, and that consists of their kids, who have left. And, once their grandkids start getting a certain age and, with remote, working, I think family has been probably one of the largest driving forces when you see people relocating back here. They want to be closer back to mom and dad who are finally getting to that age. So I see the kids moving back compared to the parents moving to where they're at. And let's face it, in the future, it's going to be, what's going to be the driving force here is our local economy. That's what's going to really dictate moving forward in addition to that.
During COVID, I probably had anywhere from 7 to 10 families that were looking to buy a bigger home because their kids moved home because they were downsized, they didn't have a job, they were furloughed. So older kids were moving home with mom and dad. Now the kids have got a job, they've moved back out, they found, either a rental or a smaller home to buy. But the parents don't want to sell their big homes because there's nowhere for them to go. They get stuck. So you can sell, but then what are you going to do once you sell? There's none, every single lower priced home that I've sold goes into multiple offers. So that's why they're not selling. And they don't need this big home they're living in.
We talk about lack of inventory, but what about the city of Youngstown? There's plenty of inventory there, I would think. A lot of it, of course, might be substandard, and I'm not talking about substandard inventory, but are houses within the city of Youngstown in the inner city, are they selling for higher prices? Are they selling at all?
Oh, yes.
I would
Most
say
definitely.
that I've seen more people, before you would get more calls of people who would say they didn't want to be in Youngstown. They wanted to be Boardman or Austintown. But I'd say I've had a handful of buyers that have given that up, and you're seeing more people in Youngstown.
And even in Trumbull County, the same goes for probably Warren. You have your more locations that are more demand, but we see the same thing in Trumbull County too, in the Warren area.
Absolutely.
But also, there's also a factor of that's big targeted for a lot of your investors, and we're still a huge rental market out there, and the rentals are inventory is as high as it probably has ever been, and that's where you see a lot of that market still have a lock hold on rentals.
Where we struggle, some of the inner city homes, whether it's Warren, Youngstown, or outside of the area, is the condition of the home and being able to finance those homes. That's where we see some of the problems, that those homes have been either sitting or, have been owned by an older family for forever and ever and ever, and it just makes it really tough as far as the condition of the home.
Which then gives a target for the investor.
Yes.
That's kind of what happens.
If more people qualify for conventional loans, they're fine, or if they have cash or a 401k that they can pull from for retirement savings to purchase a home, they'll go. If people take a little bit of time to update the homes just slightly and make sure the basics are covered, like no broken glass, no peeling and chip paint, the properties can go. But you get a lot of them that have foundation issues, they've set, they're not updated, and that's where people feel the value for their money isn't being compensated. They're used to the 1,500 square foot home for under 100,000, and now that averages up to 150, and they're not updated, and they're like, they have to put another 50 into it. They don't have the other 50 to remodel. Yeah, they just don't have the resources, and our economy isn't the greatest, but it's not the worst, but the affordability factor has jumped a lot in the last couple of years.
Probably years ago, especially the younger buyers, they wanted turnkey. That's all they did, and that probably 5 years ago, if it was not new paint, no new carpet, the younger generation, younger buyers first time, they didn't have that vision.
No.
And probably over the last 3 to 5 years, I've seen more of those buyers saying, well, we can do this now. So it can go on the market and need paint and carpet, and they're overlooking that because of the supply and demand issue. So that's really transition compared to 5 years ago, where if it wasn't turnkey, it was affected on the market.
I think the thing is too is we have to look at affordable housing. getting back to that. And I think some of the cities have done a great job. So we talk about, first of all, you said about our youth drain. Well, again, that's the economy. And to me, that has to do something with what is it that we're going to do here in the valley. We talk about it, but we need to get people back. You know, our kids are going someplace else. If you go to Columbus, and they're building new homes left and right. So something's going on there that's bringing people and bringing, you know, our college graduates and jobs back, where that's been not so good here. The second thing is that I think we need to work to, like, even with the state, one of the biggest things, again, goes back to affordable housing. And instead of tearing some of these homes down, which I understand they're blighted and they need to, why aren't we not trying to work with Ohio Housing Financing Agency or somebody to get some funding in, or with down payments, or working with the lenders to do that program to bring the people back into the city? We talk about that, but Cleveland doesn't. I mean, if you had been in Tremont in the past few years, it went from down here to way up here. And it's because people, even the younger people, are moving back, they're educated, and then they're coming back and they want that old house, they want that community and that kind of thing. You know, let's face it, if you own a house, you're building wealth. And so we want to get people back into that community and build some wealth. And I think that our cities need to really focus on doing that and supplying some affordable housing, something that's not 600,000 or 500,000. We need to look at our economy and what's going to drive it, and we need our leadership, our elected leadership, to work together bipartisanly and get jobs back here. You bring jobs back, and then it all goes away.
I agree with that, but I also think we also need to promote small business owners, because you talk about Tremont, you talk about Columbus, and people want to be in certain areas because of the walkability, the access to cool restaurants, shops, fitness centers, different things. So like we need to promote that, and I really think if we were able to do that in Youngstown, we would see a huge revitalization, because there are so many really cool opportunities and land opportunities. We have people that say, oh, I want acreage, I want land, I want this, I want that. Houses in Youngstown have that because they tore down 5 houses on both sides of it.
We have to get the jobs back.
Yeah.
And get the youth back to do that.
But don't we feel that we're on the cusp of this? Don't you guys feel that?
Slowly.
I do. I mean, I do.
I want to go back to a few things. These are excellent points. I want to talk about younger buyers for a second. What about the student loans? How many younger buyers can't get loans because they have high student debt?
I would say that that's not a huge issue. It can be an issue sometimes. You know, as far as on the secondary market, we only have to count 0.5% of the outstanding balance as a monthly payment. So it doesn't, that's for Freddie Mac, in the government programs as well. So it doesn't have as great of an impact. And they haven't, you know, they were in forgiveness for so long that they're back paying now, or they're going to be very shortly. So it hasn't been an issue really the last couple of years. But moving forward, yes, I mean, you know, the younger buyers, you know, that have lower down payments, 3%, 3.5%. They're not able to go into these houses that we were just talking about, these blighted houses, and go in, and they don't have the funds to fix things up. But the student loan debt, I don't think is a huge issue. It could be moving forward, though.
I think it's more so younger kids don't know how to use their hands, so they aren't as apt to fix things. I deal a lot with the younger buyers, as well as, and even my children included, they're not taught, a lot of them, the financial responsibilities of saving money. A lot of the people that I've come across, they have the cash just sitting at home, and you can't do that. Or their parents have taken care of them, let them go through college for 4 years, and they're not working. So it's more so building their credit up so that they can get to that point.
And to piggyback off of that, down payment. You know, you hear first-time buyer programs, which are available, but you have to qualify. Mm-hmm. And you have to put something towards. You can't just say, oh, I'm going to get a program to help, and they don't have the money, or they won't expect the seller to give closing costs, but you can't negotiate when the market is slim, prices are higher, and you're competition. So you can't go asking for $4,000 or $5,000 towards closing costs when the next person is offering, I'll buy it as is, cash. There's no
Right.
competition whatsoever.
Have you guys been winning FHA? Have you been winning deals for FHA buyer?
If they pay their closing costs, for about a month, you were getting your closing costs, but now it's back to you're not.
It's back to not,
And
yep.
the FHA product has definitely, in the last year, become more popular than what it was in the prior few years. I'm sure you see that as well.
So here's what's gonna happen with FHA, okay? I'm sure you've seen recently, there's been a lot of talk out there about the Fannie and Freddie adjusting their, what are called loan level price adjustments based on credit scores and loan to values. So what's going to happen is FHA is gonna become, rate-wise, much cheaper than, if you've got that person that has a 660 credit score, rate-wise, you're gonna find that they're gonna find that FHA is gonna be a much cheaper option for them. So chances are you're gonna see much more volume coming through as far as offers going FHA. It's not because they can't qualify going conventional, but it's going to be cheaper for them, more affordable to go
Finding
FHA.
an FHA home is gonna be the problem.
Yeah, you know what though? As far as the standards, there's really not much difference anymore between, the chipping paint, that's a big one going FHA, but there's really not a huge difference as far as what they look at as far as the home itself.
Yeah, don't you think what you're saying is going to affect people that are actually even have a higher income and also buying a little bit more expensive home? That's
Sure could be.
going to be the
Sure.
point. Exactly.
FHA also did lower their monthly mortgage insurance premium to make it more affordable. So that's another thing. But as far as quality goes, the chipping paint is a big deal. I mean, I would say about half the time you have to go get repairs on FHA, and realtors don't like FHA. Let's face it. I mean,
Nobody does.
You cringe
when you
see those offers?
Not at all.
Like, we just got spoiled during the pandemic when it was cash and,
But you know what, that's
conventional.
Fannie and Freddie have a very good 3% down program as well. It's that middle credit score, the 650, 660, 670 area where we have a little bit more of a challenge in getting approvals, and then the mortgage insurance is PMI can be very expensive with those scores.
Absolutely.
I want to move the discussion to the rental market. A couple of things interest me. You say there's investors that are buying up rental properties, and we see that in the Business Journal. We see some of the big apartment complexes and even condos complexes are being sold. But we also hear from people in the inner city that the rents are outrageous, and these out-of-state people are coming in and jacking up the rents, and people can't pay it.
Yeah.
So let's talk about this. Who are these people?
Well, I mean, we have experience. We also have a division of property management. We've seen people from New York, California, large cities, large investors, even global, South Africa. We've seen investors coming in our area from everywhere, and you're transitioning to our area because the cap rate in out west in California or New York, the amount of money they have to spend for that investment to get a low cap rate, they can buy on the cheap here and get a lot better, higher cap rate in our area. So that's what's driving investors from all over the country and even all over the globe to our area, because the property is really cheap. And the supply and demand has pretty much pushed those rents up. The market has driven that up. I mean, the rents are that high because of the market.
Or because these out-of-town buyers came in and jacked them up?
No, I think whether it was out-of-town buyers or local buyers, I still think, I mean, I know a lot of people who own some large complexes locally, and they're locally owned. They're getting the same rents. I don't think it was driven up by outsiders. I think it was driven up by old-fashioned supply and demand. The market is demanding that because the rental market has been so overpopulated over the last couple of years because they can't buy the houses. So the rental market has just blown up since the pandemic. I mean,
You know what, as far as affordable housing as well, and I think you guys have probably seen this, where you've got these out-of-town investors that come in and buy some of these older homes, and whether it's Youngstown, Warren, wherever, and maybe they don't have the incentive to keep those homes up. So you've got the property, true homeowners, and then, the rental properties. And, if you've got the owners of these investors that come in and don't keep those homes up to code, and you've got cities that don't enforce, that really affects property values, and it affects the purchase market in those areas as well, from what we see.
I have seen some investors purchase, and they're always focused on the rent rate, where that was used in the last couple of years, whereas 5-6 years ago, they could care less just because the property was reasonable. But they see the rent rate compared to their cities, and I usually have to remind them, like, hey, here, that you're not going to get $1,000 for a 1-bedroom, so don't do that, or your place is going to sit. But as inventory is lacking, somebody needs a place to live, they're paying these higher rates. So you're having a battle on both ends. People want new places. They want it to be a little bit more modern, or at least painted in the last 10 years. And some of these landlords don't care. Luckily, the couple of investors that I do work with, they come into town quarterly. They have a property management company, and they change the management companies when they don't see them taking care of the properties as they would, or they've come in and they remodeled them, and then the expectation, and I can see. But if you just want to say, oh, yeah, I painted the porch, and I want $1,500 for a 3-bedroom in the inner city that used to go for $500 a month.
Which is surprising, too. Exactly, we focused a lot. Well, we got a lot of investors because property value, single-family homes was so high. A lot of your local investors were selling their single-family homes because they could sell it more than they could ever sell it before. But on the opposite side, these out-of-town investors, it's not only large complexes. They're buying a lot of single-family homes. Mm-hmm. There's a big market on single-family home purchases on these outside investors and renting them out. I've seen a big shift in that.
And I feel the more fourplexes and the larger ones are more people that are in our area buying the larger plexes.
Exactly. I agree with that. Yeah, you're super seeing a lot of that.
But these out-of-town investors, they're not buying single-family homes in Canfield, are they? Or in the higher, it's mostly in the low-income areas, is that right?
My experience have been not necessarily low, I'd say, moderate. You have your different ones, but my experience has been more, mid to, moderate. They want stable areas. They want stable real estate, and you may have, the opposite, but that's what I have seen.
I see a mix of it.
Yeah, they're buying in, good stable markets. They're not buying the $10,000, $20,000 properties. They're buying, $60,000, $80,000 single-family homes and renting them out for top dollar and getting really good cap rates, which is a lot better than buying, real estate in New York and California, and having to spend $1 million to get 7 or 8% cap rate compared to spending that same amount of money around here getting 12, 13% cap rate.
This is great for business people. I mean, this is great for investors. But when we talk to folks like the people at Action, for instance, social service agencies, it's not great for people who live in the city of Youngstown or Warren.
One, they're not used to change, and getting them to understand that the market has shifted.
They don't have the resources. I mean, they may understand the market shifted, but they don't have that $1,000
Right.
a month.
And that's the sad part, but if you paid attention to how the economy has been going the last few years, you had to start making some shifts and changes.
Right.
To do some extra side hustles or figuring out, or the way you want to live, I want to live by myself, you may have to join with your sister, with your brother, with a cousin, to be able to afford a better home, a better quality of life.
And we ask, why is it so expensive now? Maybe the question is, why was it so cheap 5 to 10 years ago?
Right.
That wasn't a great picture either.
Compared
So-
to our neighbors in Cleveland, Pittsburgh, and Columbus, where, we have people leaving here, going and renting a place in Columbus, and they're spending $2,300 a month on rent, which is unheard of here for a 1-bedroom.
And I think over the last, it was probably 3 years ago, coming out of the pandemic, I think Mahoney, Youngstown area was in the top 10 across the country in home value increase. Well, I think it was a combination of, number one, that was, whether it was 10 or 15 across the entire country increased, but you got to realize we were 10, 15% behind the entire country. So it was a combination of coming up with the rest of the nation and our area catching up, which was the perfect storm. I think it was as high as 27%, property value, was the top 10 in the country. I think it was a combination of we were so far behind and what has happened, across the country.
I mean, I left in '94. I was born and raised Northside, Youngstown. I left and moved to Columbus to go to Ohio State. '94, I moved into my first apartment in Columbus, and it was like $350 a month. That was like '96. Years go by, I've lived in Cincinnati. I've lived in Cranberry Township outside of Pittsburgh. Right before I moved back here 10 years ago, I had a 2-bedroom, 1.5-bath townhouse that I owned, but I had paid $145,000 for like 1,000 square feet. Knew I was leaving corporate and changing career paths. I moved back home. I got half an acre, 2,100 square feet house for $92,000.
Wow.
Sold my property over there for $156 in 4 days, and that was 10 years ago. I paid rent in Cincinnati of $850 for a 2-bedroom, 1-bath 8 years ago.
Wow.
So that price now is nothing compared to and that's our area finally catching up. But if you haven't lived outside of our area, that is shocking for you because you don't understand Columbus's rates, the Cincinnati rates, Pittsburgh, everywhere else but around here, we're finally catching up. But which you have to be able to change somewhat. And the affordability, a 2-bedroom here now, $600, $700, $800 sounds crazy, but to us, but the rest of the nation and the rest of the state, they're paying it.
Yeah.
They've been paying it.
But it's all relative. And I think the one thing is, first of all, kind of what you were saying, Andrea. We're getting people like from Canada and overseas and whatever. There's no attachment to those properties when they buy them. So we're hoping that they will use a good property management company to keep them up and keep them in shape and do whatever. There again, that comes to the local officials, making sure what are these investors doing. Are they just buying these property and running them down and just renting them out? The other thing is, has the wages in this area increased enough to cover what you were saying? It's all relative. If the wages haven't come up to where they need to be, even though the rents maybe need to be higher, but how are they going to afford it when the wages haven't been, increased either? So we want to go 800, but if you're, you got to pay the bills, and if you don't have the income, and I think that's one of the other problems. It's great, and maybe it should be 800, but has the wages followed suit too? And if they haven't followed suit, then how do you do that? And again, somebody maybe from Toronto or somebody like that, everything is higher there, but it's not here. And I'm hoping that we police the cities. I don't care what city it is. It needs to be policed that these out-of-state landlords, who a lot of them buy bundles. They're bundled and they buy them and are keeping up with what it should be, and not just being technically, kind of out of sight, out of mind landlords.
Well, every day I get a list of all the lawsuits that have been filed in Mahoning County. And 80% of them, almost every day, are from the county treasurer for defaults. So all of that goes into property tax sales, where these out-of-town people are buying bundles through tax sales. And it's crazy. I mean, it's crazy. I don't see how it's good.
I have friends in Detroit, and Detroit has a plethora of properties. But to kind of control some of that you just mentioned, they only allow, you have to be a local, you're going to have to live in that property. You just can't buy 20 houses. And I mean, I've driven through some of their streets, and there's streets available of properties, just streets and park streets. It was amazing. Beautiful homes, brick, stone, beautiful homes that just need a little bit of love and revitalization, and you have back your neighborhoods. But to control that, you have to figure out which way to go. I mean, our homes here, you have that availability factor, if you get it at the right price, but sometimes the cost to update those homes are so outlandish, or finding qualified contractors who will do it, who are responsible and going to show up. That's another issue, that they're just not going to take your deposit and run off. They actually are competent in completing that work, and it's affordable, but materials went up. Now you have a price of a home that used to be $20,000. Now that base price is $40,000. Fix it up, it's going to take another $40,000. People don't have it. So it's a mix of so many different variables to making it more difficult to be able to save some of these properties.
So, Marlin, you said you're on a state board, and we have leaders of our local real estate Realtors Association. How do you push the politicians? How do you push for compliance on the issues that you think need to be dealt with?
Well, I think the thing is, it's more so one of the driving forces. I mean, with the National Association of Realtors and even the Ohio Association of Realtors. I mean, Ohio Realtors now. I'm going back a few years, but I think that it's something that we are very good at. We are very good at going to our politicians, and I think they do listen to us. And when we have bills that are up in front of the state that would help, or national things that are going to help home ownership and private property rights, that's one thing that I think that the National Association of Realtors and Ohio Realtors does very well, promoting that and trying to implement what everybody's been talking here. I'm a coordinator through NAR to one of the Congressman Johnson, and I can tell you, Congressman Johnson always listens. When we were having some issues with financing over in East Palestine over there, and I called him on his phone, and boy, they were right on it, and they really did an amazing job, his staff, which I have to give kudos. We were having appraisers, didn't know what to do, and things, and got us in contact with HUD and try to get answers there. And it all seems to be filtering out. But again, having politicians quitting, I hate to use this word, maybe lip service, but actually doing what they're supposed to, what we need around here.
It's going to be more impactful on a local level.
Yeah.
I mean, it's going to be on a local level. And even on a larger scale, a perfect example is, my company has an account for HUD. So we actually are sell HUD properties, one of our agents. HUD right now does not rehab the entire house from top to bottom before it goes back on the market. Every single home that HUD takes back and forecloses on, we have 15 properties right now that agent's doing. He's rehabbing all 15 properties. New paint, new carpet, new everything. And these are even properties that you would look at as a real estate person and say, okay, this is not fiscally responsible for HUD, because they're putting more into the properties than what they're worth. But one of their motivations is to revitalize the neighborhoods. So that's coming straight from HUD. Whether it's a mid-range property that they're completely rehabbing, or whether it's a very low price market area, they're still going in and putting tens of thousands, completely rehabbing, making the homes beautiful, regardless of the investment and the return, to stabilize the market. So it's happening on HUD right there on a national level, I'm sure, but we're seeing it locally.
So there's a difference there too, though. Those are homes that HUD has taken back. Mm-hmm. The homes that you had talked about where, maybe they're going up for sale for tax sales, where
those are different financial institutions.
So in those homes, chances are
they're not
aren't going to be financeable just because of the conditions. And then
yes.
So the only option there is for either a cash buyer or for the investors to come in and buy them.
Yeah, that's the difference with the HUD homes and the other, pretty much, other financial, national mm-hmm. and local financial mm-hmm. institutions.
And that made a difference back in 08, in 09, when you saw the huge glut of foreclosures. There were a lot of banks that they would sit on houses.
You and I were there.
Yeah.
I mean, I was actually the president of REO for a local First Place Bank.
Yeah.
And let me tell you, bankers or financial institutions, they did not want to hear I would sit there and say, hey, let's put $10,000 into this property. I could make you, 20 or 25. And that was unheard of.
Yeah.
The mentality was, oh my God, we can't do that.
Yeah.
But here we are today. And not only did, they adopted that while I was, with First Place Bank and other financial institutions with the REO. And now here we are today, more banks, more financial institutions are doing that than ever before.
Yeah.
What about flippers? Are there more flippers today? It seems like there are a lot in my neighborhood.
So we do some flipping. We do about 6 a year. The same thing as new construction, just people think that, oh, we can throw $20,000 at this, and we're not. There's all different levels of flippers, whether they just I call lipstick on a pig, slap some paint on it, fix a cracked window, and throw it on the market. We don't do that. We go in, fully rehab it pretty much. If it's got water issues, we're excavating, we're, trying to, the houses that have foundation issues, jacking them up, fixing it. So we do it right, but again, the cost that we're putting into the house, people are like, oh, you bought it for 50 and now it's for 170, but we truly legitimately have put the time and money in. I mean, like the one house, it had 7.5 inches of bow in the wall, and we jacked the house up, put, a new basement.
Yeah.
So I'd say it's more so finding I'd say everywhere you go, there's going to be that one that's out to make a quick dollar, and those don't flip quick. And then there's some quality flippers like we do that does the work, and that's where you see, they bought it for 50 and now it's, a $200,000 home. I'd say more so you're seeing the people that are trying to make a quick dollar. Rarely people do flips like we do.
Yeah, I think when the market was really good and everyone's home watching HGTV, they're out of the job or whatever during the pandemic, and they're like, oh, we can get into flipping houses. It's it looks easy, and they do the lipstick on the pig job, and you hear these horror stories of people move in and they really didn't fix anything. They have sewer backup or whatever the case may be. So it is really, I think, cultivating good, like as real estate agents, helping investors make smart business decisions and also guiding them to rehab things properly. And maybe the next frontier is the homes in Youngstown that need a little more love, instead of saying like in the suburbs where, it was a safe investment, or, they thought they were going to make a larger return on their investment. But also maybe working, Marlin does a great job bringing Bill Johnson in and to our local board to speak on different issues that we have, but maybe we have to do a better job of reaching out to different representatives to help bring grant projects into different investors and different builders to help rehab the existing inventory that we have, so we have affordable housing and making it affordable.
Somebody brought up East Palestine. So what's happening in the market in East Palestine? The people that are close to the tracks, I mean, a lot of them are rental properties?
Well, I was looking more at it when we were having issues with appraisers, like how do we value those? Like, okay, so let's say one of these two lenders, sent out an appraiser, and the appraiser goes, well, I don't know, it wasn't designated as a FEMA disaster area, so, but what do we do when we appraise it, and how do we tell the lender who's hired us what the value is and what it isn't? So we were looking more for guidelines and direction, which I have to say, HUD I talked to HUD, but it doesn't seem to be an issue. I think people I pulled up some stats about 2 weeks ago, and there's houses that were listed and sold. Now, I'm sure if it's closer to the site, there's going to be a little bit more issues than if it was, out of ways from where that happened. Get back one other thing. Oh, the State House is doing a great job, and I have to give Ohio Realtors and our local people trying to do just what Jenna said, okay? We're trying to get like a savings program for these young people to put money away for down payments so they can have this interest bearing, put it away, but it has to be dedicated to housing. And so they can get a tax write-off and whatever. So those kind of things help promote and get, everybody into housing. And also, again, affordable housing. And I think that deals a lot too, more probably like you were talking inner city. Let's fix these houses up. Ohio Housing Financing Agency, for example, works closely with them, and they have down payment assistance programs, closing cost programs that they offer out there. So hoping, and again, some of the lenders, I mean, they have to get involved, but that is there, and those opportunities are there. I know they're working on a big project right now in Zanesville and helping out there. So I think those are the kind of things that maybe these inner cities and things like that can look at and work with what we have. I think the government, our state government, is really trying to help a lot to make Ohio great, So a wonderful place. And again, cost of living here is the best. I mean, think about it. You can live here, and I think that's one thing that it's always been in this valley, that the cost of living. You can buy a nice home and you're close to hospitals, so I think it should be an area that should be a draw to people, so.
We're closing in on an hour, I think. I think so.
Okay, there you go.
We're getting there. Okay, so let's get out our crystal balls. What's going to happen? What's going to happen in this marketplace, not only with home prices, but with mortgage rates? Where are we going?
Great question.
Yeah. Mortgage rates, they have stabled off. Okay. So, people were concerned, we're going to see fixed rates in the double digits. Well, they just never got anywhere near that. I think you've probably seen in the last couple months as well. I mean, you get a little fluctuation, 0.25% here and there, week to week.
That's about a 10-year treasury bond,
Yeah.
more so than anything,
Yeah.
not the Fed funds rate. So when they raised last time, mortgage rates actually came down the same day. We're seeing some volatility, but nothing major. Yeah, they've really, they're settled in the sixes somewhere, depending on.
At NAR last year, I mean, I keep referencing back to Dr. Young. He's the economist for NAR, National Association of Realtors. I listened to him in Chicago early last year, and then I listened to him again in Orlando in November, and then earlier this year. So I've been trying to, and he'll show what's happened, and it gets pretty involved. But I mean, he really, what he's predicted has kind of been happening. So I keep referencing back to that, and we saw the big, spike. He continues to think that it is stabilizing. He likes to call it a correction. What we're going right now, probably seeing as a correction. We had an entire generation that thought money was free, and we went from free to, very expensive. So it was a lot of, just shock. So, very quickly. So I think the phase right now, the Q4 last year, Q1 of this year, kind of going into Q2 is more of a correction. And, then more of a stabilizing. He even predicted that interest rates were going to go down. They should stabilize by the end of this year, going into next year, high fives. He said 5.7, 5.8. It's just coming from the national economist. And once that happens, 24 really, sets up for a good, strong year. It's really what I've heard over the last year and a half, and I've seen so far happening. Now, we'll know more come, second half of this year and going into the next year. But
I'm sure, and I'm sure Marlin remembers these days, that, people would kill for 6%.
Exactly.
Interest rates.
I sold the house for 21% interest fixed rate. Yeah. So to me, what's 6%?
Yeah.
It's
I mean, seriously, it's like.
Well, it's an entire generation think it was free.
Yeah,
that's why.
That's what I'm saying. And when I bought my first house a long time ago, and I had to go adjustable. Because the fixed rate was 14%.
Exactly.
Yeah, so I went on an adjustable, and those adjustables were great. Yeah. I've never even had to refinance because as the rates came down, my adjustable worked. And I have to agree with Michael. I think it's a correction. I think everything goes in cycles, and so I think that it will correct, and I think it is correcting.
And the new norm is going to be okay.
Yeah, I think.
And once they realize that's the norm, and it's gonna be fine.
Because people have to deal with that adjustment.
Yeah, I think
Samantha?
we're still gonna have a shortage too.
Yeah.
Oh, yes.
Like, the absorption rate right now in Mahoning County is just a little over a month of supply, so it's still definitely a seller's market across all price points. But it's still,
Supply and demand's not gonna go away. Even
Yeah.
once the interest rates correct itself, and we get a little bit back of what we lost during this correction and people getting priced out of markets, supply and demand is not going to go away anytime soon.
Yeah.
So we still have that issue.
And I tell a lot of people, I'm like, okay, well, it's 6% now and you're going to wait and wait and wait for it to go down. But what if it goes up? If it goes down, you can refinance in a year, in 2 years. So I just keep driving that home to just refinance.
Yeah,
Yep.
and there's a lot of financial institutions, us included, that are running programs now that, they're giving them 2 years and they can refinance down the road at very much limited closing costs as well. So,
I think if we would have went back to 2019 and like the pandemic didn't happen though, we probably would have been around this interest rate anyway. Like it's where we were heading. So it went down.
Instead of 5 months.
Yeah, it just went down so far that it's a sticker shock. But this is probably where we would have been anyway. So
It's been the perfect storm, I like to say. All the way
Yeah.
this goes all the way back to so many factors, back to the housing crisis, and coming out of the housing crisis and into it's been the perfect storm. But not so perfect, but storm. Storm.
As far as multiple offers and people getting way over their listing price, do you see that continuing?
I do.
Because of the
there's no
inventory?
Not as drastic
Not as drastic.
as it was 2 years ago. I saw some insane offers. 50,000 over, or I'll buy you a Tesla and I'll get you a vacation. It was crazy.
It went from stupid to strong.
Yeah.
yeah.
When the supply is low, the demand is high, and the supply is very, very low right now. So I think it'll continue.
Do you see more builders getting into the marketplace and more construction? Because I know we talked about the Great Recession. A lot of them went out of business.
That's right.
Are people getting back into the business?
The infrastructure cost, that's the problem. We've pretty much kind of gobbled up a lot of the land that was residual from the developments that were still left to be developed from the housing crisis. But go and look at what it costs a square foot to put infrastructure into. So until the big, huge investors that want to go and invest $1 million into infrastructure of a large development and still have the comfort level that they're going to be able to match that price point, that's what's going to happen. We need some stabilization in that whole industry. It'll come, but just getting an investor to pay and invest that much money, and you guys are in new construction, the infrastructure cost is astronomical for a new development, a new raw land development.
yep.
And there's still somewhat of a supply demand getting materials.
But if you
Like
see the new construction cost is $600,000 to $800,000.
Yeah.
All right,
when you start looking at
over $250 a square foot.
Yeah.
On new
So
construction, some of these prices they put
that's
in there.
exactly it.
know.
So now you're talking that 1,500 square foot house that 10 years ago you might have been able to build for 150 grand.
Well, it's just the
You're not
cost.
even.
Like we have
that problem
Yeah.
Yeah, we have 2 ranch homes that we're building in Poland, 6 months apart of digging a basement, and we're already 35,000 higher than what we were 6 months ago, and it's the same size, same blueprint, just on a different block.
Yeah.
So it's hard.
And what I've been seeing with that, people who want to build, they're now saying, okay, that costs too much. They're buying the larger homes in the inner city. Fifth Avenue, I sold 5 houses in a year. In the area went from 220,000 was the highest that had been in like 10 years to 150,000. They buying them up, and they're migrating back from the suburbs because they can't afford the $500,000 home, and they're moving back buying 150,000 and putting some money into it. So you have this. If you're worried about schools, you have the grants that are open, that they can go to any school that they want to. So that's not a factor. But getting that large home with the character, the charm, the brick, the stone, whatever it may be, people are opting to say, well, hey, I'll go back into the city and go into some of the more prone areas and revitalize those and move into those instead and save money. And then you also have inflation, the cost of living just overall. I don't have any kids. I don't know how people are feeding their families. It's
Well, let's wrap up with some final thoughts from everybody. And we started with Rob this morning, so we'll start with Rob again. What are some final thoughts, your conclusions, whatever you want to say?
We're in a healthy market overall. Just, we've said this many times today, inventory is the issue, is that ease itself, and it's going to take some time. It's not changing anytime soon. And rates go down, it'll get more affordable. But who knows when that all is going to happen? Nobody has that answer.
I want to modify my question a little bit. Final thoughts about the local economy. I think I want to modify it too, because we hear about electric vehicles and Altium and things that are happening here. Do you see any improvement?
I think, over the last 10 years, our economy is relatively strong. It's stronger now than it was 10 years ago. We need more jobs as always, but we also need to have the people here that are willing to work and go to work and are able to get the higher paying jobs.
Any final thoughts, Marlin, on anything?
The real estate industry, I think, leads the economy. How the real estate industry goes, so does the economy. So when it's thriving, people buy appliances, they have painters come in, they buy carpet. So I think it's important that we understand that how important home ownership is. I think the one thing I would like to see again, I don't want to be political, but I think we have to. We've gone through a lot in this Mahoning Valley, and we need to be collaborative and work together to bring jobs back in and bring our youth back in so that we can see more growth. I think they're trying, but we need to try harder. And I think we need to implement, our leadership needs to implement whatever they can do, whether it be federal or state or whatever, to work about bringing jobs in and helping build affordable housing and things like that. I just, it's gone through a lot, and I've seen, a lot when the steel mills went and things like that. I do think we're getting stronger, but I really think that our local people, and you talked about that, let's work hard and let's work together and try to bring, our economy back.
Holly?
Same thing, jobs. We need jobs to keep people in the area. When I was a senior in college, we had all kinds of job fairs. People were coming in. My first job was in Atlanta, Georgia, because I had a degree in marketing. And what do you do in Salem, Ohio with a degree of marketing? Not much in the 80s. So I moved to Atlanta, and I was one of the hundreds of thousands of kids who moved back home once they got experience. Nobody wanted to hire me because I didn't have any experience. So, jobs.
Why did you move back home?
Family. I just like...
So you're the classic story.
I'm the classic story. Yeah, everyone comes back home. You can't wait to get away, and then you get away and it's like, it's not so great here. You want to move home.
I want buyers to stay ready so they don't have to get ready. Prepare for whatever it is you want in the future, and it'll happen when it's supposed to. Sellers, put a little effort into making your home a little bit better, and you'll be surprised of the outcome.
I would love to see more opportunities for more jobs in this area, and also finding builders and investors that are willing to work with realtors in the area to foster good programs to maybe find grants for more affordable housing, because there's a need for it, definitely. We can't rebuild the same house at a cheaper price, so we have to find other alternatives for it.
I would say for more inventory, more jobs to come back, but at the same token, I mean, I'm always on the go, and a lot of people need to come back to work. I mean, whether it's food service, going to the grocery store, there's still a huge shortage. Even in the medical healthcare, I mean, they're swamped. Or you have all these traveling nurses going out, which is just insane to me that we have it right here, but they're getting paid triple to go travel 3 states away. So just to put everybody back to work here, or encourage them and stop giving out benefits for them to go do things like that, or benefits to sit at home. And just the price of construction to come down. Not gonna happen, but.
So one of the big things, not just, affordability of homes. We see that obviously we've talked about that, how, where we rank, as far as being a very, very affordable area. Quality of life, quality of living, just things that to keep young kids here, whether it's entertainment, whether it's, whatever it is. I think we've got to focus on those type of things as well. The supply issues, I honestly, until until you're able to build, low cost homes, I don't know how you solve that. I mean, the costs are right now what the costs are. I mean, you can hope all you want that you can go out there and flood the market with X number of houses that are affordable. Right now, it's just not realistic.
My glass is always half full. I'm very optimistic. I really am. I'm very excited about the Valley, Mahoning, Trumbull, Columbiana. I really think it's going to take a lot of work. I think we're on the cusp of it. I really do. A lot of large companies, national companies, they do a lot of due diligence. They do a lot of study and spend hundreds of thousands of dollars studying our area. And, why would a Meyer come here? Why would, you see more and more and more of that. They're doing studies. They're doing research. They feel confident in what's happening around here. It's going to be a lot of work. Yes. When it comes, we're going to have a lot of new challenges and a lot of new problems, but they're going to be good problems. Our area is prime for the picking for development, manufacturing, industrial, in all aspects. Because back to why investors are coming here and buying rental homes, because their cap rate's better, go buy land in the West Coast or go buy land on the East Coast. Land here is cheap for these companies, these manufacturers to buy and build. So my glass is half full. I think it's going to be a great run. And a good thing about it, it's going to be long. This isn't going to be short term. We're talking decades. We have so much to build from. We could be talking about decades of growth in our area. I'm excited.
That's a good point to end on.
All right.
Thank you all for coming today, and this has been a really good discussion.
The Business Journal Roundtable series is sponsored by iSynergy, creative digital advertising.